All right, so to
Right.
start the video off, how has your studies been? And your thoughts on our first meeting.
Yes. On the first meeting, basically you have given me the PDF and also based on the drawings that we have seen, you mentioned about the castle and the inverted castle. And as I was looking at the charts, I solely focus on gold and I've checked other different types of pairs and currencies, but most especially with gold since I'm a gold trader.
Hmm.
And I was
Okay.
looking at it for the whole yeah, I was looking at it for the whole week. And once you see it, you cannot unsee it, if you know what I mean.
Yes, for sure. Especially on gold.
Yeah, especially in gold. Once you see it, you can really not unsee it. And then I was like, oh, okay, so this is what he mean. I started looking at it at a larger time frame, around 30 minutes, right? So
Hmm.
after looking at it at 30 minutes, what really happened on gold this week? I was looking already at it on a Monday. It was already like a peak formation high and a peak formation low on Monday. And then I was like, okay, I'm just gonna be waiting for this one to be broken. So I look at it on Tuesday, and then yes, there was really a setup on Tuesday, and then on Wednesday it did it again. So there's a peak formation high and peak formation low, and I was like, okay, maybe this one already broke down, and I was thinking on Thursday or on Friday it would really go up. So in a lower time frame, there are a lot of opportunities that you could take, right?
Hmm. Hmm.
But you need to be really careful. That's why I was looking at your PDF. There was also a part there that you would need to wait for the three session setups, right? There would be peak formations that would be created from Asia and then London, and then sometimes the play out would be in New York. And I was thinking what you have said, you just need to wait for the third hour on New York. So
Hmm.
yeah, I,
Hmm.
wa- I was trying to really check. I was trying to really check what's really happening, just looking at it, just checking what time it is. Previously, I'm gonna be taking trades um within what do you call this? Asia, London, and then I'm gonna be losing. But right now, I'm just waiting on it on London. No, I'm just waiting on it on New York to see what's really happening. So maybe I think it's really a change of a pace and also discipline for me.
Hmm.
So um I'm also starting to like really see what's really like happening. It's just based on the peak formations. So that's really a game changer for me.
Correct. The peak formations and the levels are the cherry on top.
Yeah,
Because these trades will come off of one of the three daily levels almost every time. It's actually crazy, especially on gold. Um, Now the daily levels, which is what we're going to talk about today. We talked about peak formations our first session, which I'm just going to give you a quick reminder here. Uh, the basic scenarios that can play out is a peak formation low, peak formation high, breaking structure for a pump and dump trade, or a peak formation high, peak formation low, breaking structure for a dump and pump trade. If you
yeah,
can master this, because for instance, you actually can just look for these two patterns. Now, over 3 days, you're not going to always get the same signal day. Sometimes there'll be a close and breakout. Sometimes there'll be a first red day. Sometimes there'll be an inside day, but it will still give you these same three steps just to review what we talked about last time. Now, for today, the daily levels, the high of day, low of day, and the closing price are our relevant areas that we're going to look to take a trade from. Let me actually change the color here. This will be our high of day or previous day high, our previous day low, excuse me, and our closing price. This is where this gets really interesting. So we can get a P formation low and a P formation high going into London. So this could be Asia, peak formation low. And we're going into London. They put in the peak formation high, which they may trigger a level and they may stop going higher. We may see a consolidation. Then we see our break in structure. Then we see New York pump, pump, pump back to or near this level for our trade back down. Now, there will be times where the trade already took place and New York is opening, somewhere around this region. It will give a continuation trade from the closing price back down to the low of the day. We can also get whoops, we can also get a breakout and they pull back into the previous day high. One second. Sorry about that. We can get a breakout, a pullback for a continuation right off of this level. This is very important here because I'm telling you now, I get a lot of questions about entries. I mean a lot of questions about entries. And the only thing you have to know about entries is one, I'm taking engulfments and pin hammers, which this is an engulfment. It's a candle that closes higher than the previous candle engulfment, or a pin hammer, which will see the tail at the end of that candle. You may even get a combination of these at the same time, an engulfment, then the pin hammer. But I'm looking for these formations at these levels. It may
Oh,
even just
okay.
be a big rejection candle. I may even just get a big bear candle and a rejection, and this could be bearish. Let's just say this is a bearish candle. I will go ahead and buy this because look where my fill is. I'm getting filled at the level, and I'll just place my stop loss behind the wick. But I'm anticipating the next candle to be bullish, and I am mentioning a 1 hour candle, 30-minute candle, 15-minute candle. I'm not talking about lower time frames here. I'm talking about, let's just say this was a 15-minute bearish close and they pin at the level. So I'm expecting the next 15 minutes to be bullish, which is why I will go ahead and just press buy. But there's only three things the markets can do: breakout, pull back, and trend, like we see here. We can get a breakout, a failure to go higher for a reversal, which this trade will come off of the level, or we can stay in a trading range from high to low, and you're quite literally just buying a low or selling the high. Now, closing price can always be a reference point for a continuation move, because once again, we can get something like this from the high of the day, false break, pullback, dump, pullback, continuation from the closing price. But there's a reason for this. And that reason is because if you went long from the close, by the time they get back underneath the closing price, who's trapped?
The buyers.
Buyers. And when they consolidate at this level and collapse, um,
Yeah.
yeah, they're all underwater. Vice versa if it was the other direction. So if I was to just go to this charts, and I'm going to stick with gold, let's just go back to the beginning of the month once again. We're going to go over a few pump and pump opportunities, whether that's 3 day and three sessions. Let's see, June, July. So the month actually started here. Excuse me.
Tuesday, July 1st.
Yep, Tuesday. So you see this level here? This is the previous month's closing price, which is also Monday's closing price. This level here is Friday closing price, which is also the closing price or the starting point for every week. So if that's the case, I'm just going to highlight this really briefly. This is where the auction starts off. This is where buyers and sellers are sitting. So let's just say traders short from this level. And they did. They triggered the previous week's low and close and pull right back inside and go above the closing price, retest the closing price and continue. Guess who's trapped?
Yeah. The sellers were trapped. Now, yeah.
Sellers. And they remain trapped the higher they go because we get a higher close on Monday, a higher close on Tuesday, higher close on Wednesday. But check this out. We get day one longs, day two longs triggered, day three longs triggered. This is the highest close of the week so far. They trigger breakouts. They pull back underneath the closing price and they give, a break and retest trade here. If this market was to collapse, longs would be trapped. And it would not make any sense because here's Thursday's close. And as you can see, they closed below Wednesday's close and Tuesday's close. So everyone above this level is trapped. So guess
Yeah.
what they're going to keep doing? They're going to keep doing lower. Now, ironically, Friday closes above Thursday's close, but we still have short trapped and they have not hit stops yet. So what do we have here? We have a peak formation low, peak formation
Oh,
high,
this one.
up and down. But if we're just strictly looking at levels here, this is Friday's close. They broke out on Monday and they came right off of the previous month's closing price. This is a beautiful opportunity to go back to where the dump started. And they closed relatively around that same area as Friday's close, which means there's no one really in the market yet. But they did trigger breakouts. So we have shorts in the market, and they may or may not have hit their stops, but they break down again. We're using this level as a major level of resistance. and they trade right off of a previous day level. Not a coincidence here. Because if they was to trade back underneath this breakout, that would put these shorts back in the money, which is exactly what they did. They're back in the money. But we have one, two, 3 days of
3 days.
shorts.
Yeah.
And this is our closing price here for Tuesday, which we're below the closing price of the month and week. But they give us a dump and pump template. So we can expect a close back above the previous month's close, which the previous month's close is acting as a major level of support, giving buy trades below this level. So below this level are buyers, above this level are sellers if they're strong enough. But once again, they give us a peak formation, a backside, higher highs on that backside, a first green day signal,
Yep.
and they give us the buy trade from where
Closing price.
traders get so tricked up here because they don't understand that these are literally where the trades will come off of. Once you see that, you cannot unsee it. But why do we use these levels? We don't just use them for major levels of support and resistance or a magnet. It's so you can identify who's trapped. It's the easiest way to identify who's trapped. Just look left. If there's a lower close and we're going long, okay, shorts are probably trapped. If there's a higher close and we're going short, okay, longs are possibly trapped. And that's that's all you have to think. So it's not rocket science. Um, Now, obviously, the more you mark up these charts, the better. But as you can see here, a dump and pump template, a signal day. We actually got quite a few signal days here for this week. This was a amazing dump and pump opportunity. Now going into the next week, we get a breakout that breaks right back in. Funny. Now this is still a higher high. Don't get me wrong, but they break out and break right back in. Now this is our reference point. Shorts are in the market on day one. They're in the market on day two. But if you went short from the closing price, they never got to see the light of day. As you can see, they literally never got to see the light of the day, and they gave a reversal trade from the closing price. Now, the old me would think that this is random. I would say, oh, that's market manipulation. There's no way. Uh, Trump, I told you it's Trump. But when you
Yeah.
understand
Uh,
these levels, oh, go ahead.
yeah, I was thinking about it. Maybe since speak.
Now, now Trump has no like. It's not because of Trump, but Trump was just a mere catalyst for this setup. But the setup was already there, which means that Trump is actually playing these levels, um, just like we should. So this setup didn't happen because of Trump, but it could have been it's a possibility that it could have moved more explosively because of Trump, because of the large volume that he's able to put into the markets. Uh, so as we continue on, As you can see, these levels, OMG, these levels, since this is a higher high, that's the recipe for the dump and pump. Higher high, that's the recipe for the dump and pump. We get one, two lower closes, higher high again. Day one breakouts. I would not call this day two breakouts. Day two breakouts, which we get a low of week reversal trade. Check this out. If traders were short here, they're in the money for a very short time, but as soon as they close back above this level, engulfing, or even this candle here, because this is actually where I went long, uh, shorts never got to see the light of day. Now again, this is a Thursday reversal trade, nail and bail, but we get a higher close on Thursday, which acted as a major level of support for London to give the dump and pump setup because shorts are trapped. This is our P formation, P formation, P formation, backside, higher highs. That is the recipe for the dump and pump. So let's continue. And again, this is just to show you how powerful these levels are. This is where our auction process starts off. Once again,
So it's always Friday.
always
Friday's
Friday.
closing price.
This is where the auction starts off. Monday breaks out. Okay, we got longs in the market. Tuesday breaks out. We got longs in the market. Now let's go over Tuesday really quickly. Tuesday was such a good setup because they gave opportunity to buy below the closing price. They also gave an opportunity to buy above the closing price and at the level. There's a lot of traders that think the smaller time frames are the only time frame you can enter the market. That is cap. You can enter the market on any time frame as long as your fill is near or at these levels. So we get a higher close on Tuesday. They trigger breakouts and they immediately start failing and breaking down. So guess what they're gonna do? They're most likely, if they're gonna trap shorts, excuse me, trap longs, they're not only going to close below this day, but it's a high chance that they're going to close above here too, because this would close, excuse me, this would trap shorts. Now, since we're right above the breakout level, this could either be one or two things, a continuation or a reversal. They close back inside. And again, we can draw these levels across because here's the prior week's breakout level, which ironically lines up right with the closing price level of Thursday. And they continue shorts. This is the pump and dump, P formation, backside, lower lows for the pump and dump template, 3 session setup. You can also get it over 3 days or even 5 days. One, two, break and structure, collapse. It's not a coincidence that Friday closed below the prior Friday's closing price. Not a coincidence at all. This week, we got our reference point where we start off,
Ooh, okay.
and Monday breaks out. Tuesday pulls back. Wednesday gives a continuation trade.
Continuation.
Now, because sometimes you can get a lower close and a higher close above that. That does not always mean that these traders are trapped. Because if you went short from the breakout, your stop is here. which means they're still in profit. We also have Friday's close still in profit as well. This was an amazing opportunity. And they close below for the second time this month. Mind you, they only did this twice this month. The first time at the beginning of the month, the second time this week below the closing price of last month. Stacy does not have this level on his chart, and he vaguely talked about this level, but I'm going to tell you right now, this level is extremely important because you can get really good opportunities from this level. Short trades, long trades, reversal trades, trend trades, uh, really explosive moves from this level. So we get our closing breakout again, and we get our lower close. But as you can see, once again, the market only does three things. They're either going to break out, pull back, and trend. They're going to break out, fail, and reverse, or break out and range. Those are the only three things markets can do. What do we have here? Breakout, pull back, fail, and reverse. If we draw these levels across, as soon as they get back above the monthly close, who's trapped? Excuse me, who's trapped? At the beginning of the day, who's trapped?
Okay.
But longs are also in the money because traders also went long here. As soon as they close back above this breakout level, guess who is trapped? So, just by understanding this alone, your conviction can be really high for a best trade setup. And as a matter of fact, you'll be able to tell the difference between a shitty first red day and a actual first red day. So let's just go to a hypothetical scenario here. Let's see, what pair was that? Is that oil or was that US 30? Let me double check here. Yeah, that was US 30. Look at this. So if we start from Friday's close, this is where we start the auction. Monday, higher close. Tuesday, higher close. Wednesday, higher close. And a first red day signal. This is the first red day. Everyone, oh, first red day. Guess what? We're going short tomorrow. And then they go short and then they get clapped. Why did they get clapped? Can you guess?
Hold on. Closing prices. Okay. Breakout, breakout. No. The first red they failed.
Why did it fail
It
though?
the level, the previous day high, and then it the closing price, it went above. So that's why they get clapped.
Correct. Also, I don't know if I mentioned this earlier in the video or not, but I should have. This blue line, that's the previous week's high. So
Oh,
this,
okay, that's the breakout point, I would say.
correct, correct. This is just a big old breakout, pullback, continuation. Fancy. Now, this scenario versus this one, we get a breakout, a close below our auction point. This is the real
So this
first red
is
day.
Rails rare day. I see.
Yeah, it's a real one. Because guess who's trapped?
It's the
Longs.
buyers. Yeah.
Longs aren't necessarily trapped here because if you went long here from the breakout, if you traded the breakout, your stop loss is right here. So do they really trap longs here? Not really, because they're still in the money.
Yeah.
Um, this is a lower close, but we're still also above this breakout level. Now, it would be different if they closed inside of it. That would be a valid first red day signal. But as
True.
you can see here, they close back inside the weekly level, they trigger it, close back inside, and they trade right off of the level. This is a beautiful trade here in the third hour as well. All you had to do is wait for the third hour. Let's actually go to the third hour here. Now, this is a 3 minute chart, but all you had to do was press sell anywhere right there. Any candle. It could have been the bull candle, could have been the bear candle, could have been the pin hammer, could have been the breakouts. You could have even just traded the retest. All you had to do was press sell. It's actually really crazy how easy of a trade this was. Notice how you don't have to mark off any breaks and structures, no soups, no gaps, no hunts, no blocks, no gaps, nothing. All you had to do was mark off your first red day signal, understand that we now have longs traps, and since longs are trapped, guess what they're gonna do? Put them in pain. Lower low is the recipe for the pump and dump. So, just your general thoughts on today's lesson. Do you have any questions
Um.
so far?
Now I'm just checking on the previous week's closing price. It's because previously before we talked about this, I'm only focusing on the closing prices like on a daily basis. But now that you mentioned that auction starts at the Friday's closing price, that's why I've heard Stacy mention so many times, check at the levels, check at the previous Friday's closing prices. I didn't really understand at first. Yeah, but now it's getting clear. So,
Mm-hmm,
oh,
mm-hmm.
okay. My question is you only on peak formations you only need to check um those, right? But how would you know that those peak formation would fail? Like it would go on the other direction, like a continuation trend.
Okay, good question. Uh, the only real answer for that, you go to a blank area. The only real answer for that is, let's just say we got a peak formation low and a peak formation high.
Yes, that one.
The only real answer for that is if they stay on the front side. That's when you will see they're just gonna keep going higher. Trend trade. But if we
They
get
did
our
really not broke up, right?
say it again.
They did not really create the castle.
Correct. They did not fail. So, this is a breakout pullback trend on the front side. But if you're looking for the reversal, you're going to have to look for them to break out and fail. They're going to fail to go higher. Then we can look for our reversal trade, lower low on the backside, or as Stacy used
Okay.
to always say, lower low on the inside, because you're back inside of the range.
That's why. That's what it means. Stay inside. Okay.
Correct. So that's the real answer for the only real answer for that. If the peak formation breaks and they go higher or lower, all that means is that the peak formation is not in place yet. That's all that means.
I see. So you need to wait.
Correct. So pretty interesting there. Um, if you're looking for a reversal, the basic criteria for that is a peak formation and a stop punt into that peak formation for the short trade. So basically a lower low, lower high, lower low formation.
Okay. And I saw on the group chat, um, is the ebook that you have sent different from what you are selling? Or I've seen your videos, it states there's something like about time compressions or something. Is it different from that one or no?
That is a much older ebook.
Oh,
That I
okay.
think,
I see.
yeah, that was from last year. I can send that to you if you'd like to look
I
over it. But
yeah,
yeah, it's just the FYI. Hold on one sec. What's your Discord name?
Paragon.
There you go. Okay. Just the FYI. That ebook is really just a collection of notes from my studies of Stacy. This ebook that just released is my actual ebook. So it's all just it's how I train.
Is it
Um,
the Pump and Dump Mastery ebook?
correct, correct, yes.
Oh yeah.
So
Okay.
that's the most recent one. But this one I took the old one down for the new one, for now at least. But yes, this ebook here, it's really just a collection of notes. So when you read over it, you'll see that's literally what it is.
I see. I see.
One
And
second.
in regards to your, what do you call this? Your indicators. I can see that most of your students has simple charts, and that's
Yeah.
what you've been really mentioning about. So how do you set this one up? Can I see or have a
Yes.
reference?
So I have the TradingView premium subscription, which allows me to have more than four indicators. The essential, I think, only allows you to have four or five, but I have the premium, which is $20. I can actually send this template as a copy, and you can
Okay,
resave it and rename it. But
okay,
let me just briefly go over it with you, and so you can have it as a video reference. So as you
yes.
can see here, this is the 15-minute chart. I have the previous day high levels, previous day close levels, previous week levels, previous month closing price levels on the chart.
Ooh,
So they're all here. But if I go to a daily, it will show you the previous month high and low and closing price on all of these charts. No problem because Stacy says the higher time frame runs the market. So, and it's funny because Stacy doesn't even have these levels on his chart. Now, everything is fractal. I'm pretty sure he's wants us to do our own homework. But just look at this. Look where the trades come from. Levels, levels,
yep.
levels. This is a breakout that fails. Levels. This is a breakout that fails. The first green day. Levels.
Yeah,
Inside.
levels.
This held is a
Yep.
major level of
Closing price.
resistance. They consolidated and came right off of this level. Levels. Levels. It's really crazy. The trades really
Yeah.
do come off of the levels. Um, but this is the daily chart. You can go to a 4 hour chart, and it will show you a clearer view of the month if that's what you want to look at. Uh, and you see the separators, I can actually turn that off. That's a trading view feature. Um, but I usually keep it
Oh,
on.
where did you click that one? Session breaks. Oh, so it's
Yep.
just here.
Yep. Double click, bang. So I don't use the one that's in the indicator. I just use the one that's on TradingView. Session breaks.
Okay, I see.
And you can customize it to whatever color you like. But as you can see here, the auction starts off from the previous month's close. That's where the auction starts off. And we get higher closes, higher closes, higher closes. New week, new week, new week, new week. They trapped longs. We can clearly see that.
Yep.
Clearly. We can clearly see that they trapped shorts, but this is an amazing buy opportunity. Amazing. So it all makes sense when you can have a clean chart, a clean template,
Yeah. This
to
is
where it
what.
can,
Uh,
right, you know. And if I go to my 3 minute or my smaller time frame, because I actually split screen when I'm trading live. What do I mean by that? Let me show you. So I will have a 1 hour chart up, a 30-minute chart up, a 15-minute chart up, and my entry chart. My entry chart will have the EMA and the round numbers, but every other chart, now the other charts have the round numbers, but they're larger numbers. The 250 pip box. This is the 100 pip box. This is the 250 pip box. So this Friday was crazy. I mean, it went like 600 pips. That's insane.
yeah.
Um, so this just gives me a crystal clear view of what's going on every corner. But I can also, as you can see, let's go here, because the template has everything you need. It has the 100 pip box. It has the 250 pip box. It has the sessions, levels, and these two at the top, they're hidden. You can only see these on the daily and the 4 hour. I have them time frame specific. So nothing really gets in the way. So I plan on actually sharing this to the group as a whole, so everyone can do what
Can
they
see it. Yeah. Yeah.
right, do what they do. Customize it, color it different, whatever. Doesn't matter. As long as you have these levels, because if you don't have these levels, you're trading blind.
Yeah.
You are, yeah. I don't know how you're doing it.
Yeah. How do you get this one? Just these levels. I think the round numbers. Maybe that's for another time.
Okay, just the
Yeah.
levels. It's my indicator. You can find this in the Discord. Okay, I'll go ahead and add you.
Okay. and then I'll save the template. Oh, okay. Clean charts.
Very clean. So in here are where the indicators are,
Indicators.
and
Okay, here.
this here is the indicator that I am using. I'm gonna forward this to you.
Okay, right here. Yes, this one. Okay, close it and reopen it. Okay, sniper indicator. Ooh, okay. I got it. So that's one. Okay,
Hmm.
now I get it. And then what's the what do you call this? No, no, no. How do I say this? How do you set this one up? Just the one, right? This is for the levels. So how do you set this one up that it would go to the Friday's closing price all the way? Wait, up previous no, close. Weekly and monthly here.
Yep.
I get it
Hmm.
now.
Yep.
And
Yep.
then
Yep.
previous days class. No, let's just don't put daily open. Okay, it's here.
Hmm.
Session lines. So this is the only thing that you've been using first, right? This to have this clean chart.
Are you sharing your screen?
Oh no, 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 I'm not sharing it. Hold on.
Oh,
Let
but
me
yeah,
share.
this is
But can I see the
my settings.
yeah, the settings, the
Yeah.
screenshot.
Oops, 1 second. So I separated the sessions and the levels. For one of them, I use for the levels, which I have them all turned on here. And the other one I use for the sessions.
Also, it's
Um,
separated, but it's the same indicator. Is that right?
yeah, correct. Same indicator. Yep, correct.
Weekly. No
So previous
close.
day, week, month,
Closing
day,
price
week, month.
levels. Okay. So you separated. I see. Can you scroll down? Opening price levels. Did you check that one?
Uh, oh yeah, no, I don't use those. For futures charts, yeah. But
Okay. Can you scroll down a bit? And then a weekly here. And then no EMA. Okay. Day of the week now. Okay. And then the other indicator you have is just only for the Asia, London, just for the sessions. Is that correct?
yes.
Okay, can I
I mean,
see?
I doubled my indicator 1, 2, 3, 4, 5, 6 times.
Yeah,
So
I see
yeah,
it.
yeah. One of them for the daily levels and a daily time frame, which I only have that visible for the daily, so it doesn't like double, like so I don't run into trouble. Um, 15 minute. I mean, they all have different visibility settings as well. Not all of them are
Okay.
visible on every time frame. As you can see, The top two, really the first one, the top one, that's only visible on the daily. The second one to the top is only visible on the 4 hour. And then everything under that is visible on the other time frames.
Okay, I see.
But the smaller I go, the numbers are only visible on the smart from 30 minute and below. And um yeah, that's about it.
I get it. So yeah, it got much cleaner. Much cleaner.
And I
Okay.
think this is a very important part. I'm gonna make a video about this because this is just so very important. These levels.
So previous week was blue. Ah, here. Okay. Blue and then sessions. Previous days close. Okay. Yeah, I think I got this one. I'm just gonna be tweaking it. Yeah. It's much
Hmm.
simpler now. Yeah, it gets much simpler now. Thanks.
Nice. You're very welcome.
Okay. So the first week was peak formation highs. This week was levels. So I'm really starting to understand. Okay, so that's why it failed. Um, Peak formations are not the only one, so it you need to check the levels and closing prices. So that's why.
Correct. Correct.
Yeah. Yeah. But it's because just a quick one. I was already looking at Monday like a peak formation high and low, right? And then Tuesday comes and gold. I was like, oh okay, it's still moving up. And then I was already thinking maybe it would be the start of a buying opportunity. It's because the peak formation high and low was already set on Monday. And I was like, nah, maybe it would still go down, something like that. But now that I know about the levels and the closing prices, I was like, ah, okay, so that's why.
Yep, yep. It just gives you a really clean view, really clean and clear view of what to look for.
Yeah, there is still was this long closing price here that it didn't take, so that's why when it breaks out, so you would know now, okay, now the shorts are trapped and would start to buy off. I see.
Correct. Correct.
That's nice. So nice. Yep. Yeah, I think I'm good for today. I won't take too long of your time too. If you can send me both of the recordings from week one and week two, that would be great. And
Very
then,
nice.
yeah, I'll give it another week to study, to back test and front test these two theses, and then let's go from there. I'll schedule another meeting for the third
Yes, sir.
week.
Yes, sir. So I'll
All
see you
right.
then.
Thank.
Blessed to
Yes.
you and your learning. Let's get better.
Yeah.
Keep it simple.
Thank you.
You're welcome.
All right. Keep it simple. Thank you. Thank you. All right. Bye bye.
Peace.
All right. Peace out.
Mhm.